Should be preparing to go live right now.
Well, I see it. Thank you, Monica. All right, so good morning, everybody, for joining us bright and early. I am actually going to start out here by sharing my screen so I could do a really quick overview of the organization here. Here we go. Hopefully you guys can see my screen now. There we go. You guys can all see it okay?
Got it.
Perfect. All right, I saw a couple head nods. Thank you. All right, so to start out, my name is Nikki Caboose. I am the VP of Development for Tech Hub South Florida. And this morning we have one of our community coffees. The topic is VCs in South Florida with our panelist, Mark Volchek, founding partner at Olas VC, Sarah Lucas, COO at New World Angels, David Chitester, founder at SeedFunders Miami, Jeff Ransdell, founding partner at Fuel Venture Capital. And this morning, we do have ASL interpretation by Beth Wagmeister. So thank you again, Beth. She does this for us at every single one of our community coffees. And hopefully we'll be able to get some funding. So if anybody's interested in sponsorship, to be able to do this at future and additional events as well. And our sponsor this morning is South Florida Business and Wealth. I don't know if we have them on with us yet this morning. Hopefully we've got somebody there that can say a few words once I'm finished as well. And our mission and vision is building South Florida into a tech hub. And part of that is our community creed. So Tech Hub South Florida is wholeheartedly committed to building a welcoming, collaborative, and inclusive community for all. We put inclusivity first, engage with others, are considerate to all, and don't sell to people. So in short, we want to make sure that everybody is welcome to the table. And again, our mission, building South Florida into a tech hub. We are a 501c6 nonprofit membership-driven organization. We currently have over 200 corporate members from Miami-Dade through Palm Beach County, and then we actually have a couple that are trickled into Martin County as well. These are some of our wonderful members. Again, we've got over 200 members. They run from startups all the way through enterprise, such as Carrier, Florida Crystals, City Furniture, Office Depot, Boca Code, and many others that are listed here. For anybody that's interested in membership, I won't go through it all here, but we do have 4 different corporate membership levels, giving you speaking opportunities, access to talent, exclusive peer groups, and so on. If anybody is interested, please feel free to reach out to myself or Monica, or you can go to techhubsouthflorida.org, and there's a button that says Join Today, which will tell you a little bit more about the memberships. And for our events, so this is in an average week, we stay pretty busy. We've got our tech talks. They actually were weekly on Mondays. Now we're slowly getting back to doing them in person. So we're doing them every other week. I believe the next one we have coming up is in Miami at the lab on Monday, the 24th this month. And our community coffees, like this morning, are alternating on Tuesdays. They alternate with our podcasts, also Tuesday mornings at 8 a.m. And the community coffees can be almost anything and everything. We've had discussions on mental health and wellness, to tech talks, to VC discussions, diversity. So it's a little bit of everything. Our podcasts are always highlighting different business, startup, and of course, technology leaders in South Florida. And then finally, our lunch and learns are weekly on Fridays at noon. They're always introductory courses, so they're perfect for anybody that's interested in something or students that may be learning something new. For those that may be looking for a job opportunity, if you go to our website, again, it's techhubsouthflorida.org, there's a button that says talent. And there is actually a job board where you can look for specific jobs. But for some reason, if you don't find something perfect in the moment, we do have a resume distributor where you can actually just upload your resume. And once you hit submit, it goes to all of our members at once and any companies that have signed up to receive the service as well. And last but not least, we do have a pretty active Slack channel. I think we're about at 4,500 members now. That's at techhubsouthflorida.org/Slack. Or if you'd like to be added to our Monday e-newsletters, they go out every Monday afternoon around 2 o'clock. You can actually just text us your email address to 561-250-7206. And I am going to stop sharing And I don't know, do we have somebody from South Florida Business and Wealth on? I know Mark normally attends in the morning for us. He might not be on this morning. So again, I'm just going to say thank you to them because they, again, have sponsored all of our community coffee. So they've been a wonderful partner for us as well. And I'm going to go ahead and get right into it. So if we can start off by having each of our panelists just give us your name, again, where you're from, and a little bit about yourself or your background, and then we'll get right into the questions. And I'm going to start with just who's on my screen first. So I've got Dave on my top of my screen here.
Hi, everybody. Dave Chitester. I'm the, trying to be short here, I'm the founder of Florida Funders. I started that 8 years ago. I ran that for 3 years, turned it over to Mark Blumenthal and Tom Wallace, who are doing an incredible job. A year later, I started SeedFunders in St. Petersburg. And our goal is we're looking for pre-revenue, scalable technology with a clean cap table. So pre-revenue companies, we want to be the first professional investors on board. Our average investment is $150,000. We now have 40 partners in St. Petersburg. A couple years later, I launched SeedFunders Orlando, and we have 10 or 12 partners in Orlando now, and I'm announcing that we are launching SeedFunders Miami. Now I'm actually interviewing people to run SeedFunders Miami, looking for office space. So we are launching SeedFunders Miami. It's going to follow the exact same business plan as SeedFunders St. Petersburg and St. Petersburg Orlando. So it's a new organization. We are looking for investors and companies to fund. Again, pre-revenue, scalable technology. We're agnostic as far as industry, and we're looking for companies to, our average investment, as it says, $150,000. Thank you.
Perfect. Thank you so much, Dave. Next one on my screen, I've got Sarah.
Thanks, Nikki, and good morning, everyone. I'm Sarah Lucas. I'm the Chief Operating Officer of New World Angels. We are a structured angel network, and we function a lot like an early stage VC fund. We've been operational in Florida since 2003. And we, as well, are industry agnostic. We look at deals in pretty much everything except for straight real estate. Our most recent deal was a medical device. We led a round, our group put in about 1.2 million of a 3.5 million round technology commercialized out of the University of Miami. We are a membership group, so if you're interested in learning more, you can get in touch with me. And also, some of you on this call may know I'm also an executive committee member of Tech Hub South Florida, and I chair our startup committee for the organization. So I'm really grateful to all of the participants today, and especially all the entrepreneurs who've joined us.
Thank you so much, Sarah. And I'm glad you said that because I was waiting to see if you were, so I was going to give you a shout out. So, next one I have is Mark.
Hi, thanks for having me. So I'm Mark Volchek, founding partner of Olas Venture Capital. My background is really as an entrepreneur. I started a company back in 1999 as a senior in college and took that all the way through an IPO, and eventually left my full-time role there and moved to Florida and started a venture firm here in 2016. And Olas Venture Capital is a seed stage venture firm focused on B2B software, enterprise SaaS type companies that really have some early revenue traction, some proven product market fit, and are looking to raise, $2 to $5 million, of which we generally can do about half the round, and then work with others in the community to fill up the rest. So that's kind of a quick overview of our firm.
And giving a shout out to Mark as well for being very involved with Tech Hub, also sitting on our board. So thank you, Mark. And I know you've done some stuff for us too, as far as judging and things at pitch contests and hackathons. So thank you.
Oh, you're welcome.
And Jeff, last but not least.
Yeah, well, good morning, everybody. I'm Jeff Ransdell. I'm the managing partner for Fuel Venture Capital. We started the firm here in Miami in 2017 with a global focus. So we have boots on the ground in Israel and in Europe, Latin America, here in the United States. Our European sister fund is called IDC Ventures. Our domestic fund is our flagship is Fuel Venture Capital, which also goes into Latin America. We have a number of spin-off funds that we've created, about 700 million in AUM, and our average check is between 1 million and 15 million. It's a multi-purpose fund. We do invest in early stage companies, but really our focus and really our wheelhouse is more later stage companies. With our background in the public markets, we have some expertise in helping companies really, go into the public markets or create opportunities with major corporations.
Well, thank you very much, Jeff. And actually, Sarah, I'm going to pick on you first because I realized we didn't have this question outlined in our run of show here. But for anybody that's watching that may not know what a venture capital firm does or is, could you briefly explain that just to kind of get us started with the conversation?
Sure. That's a big question. One of the other things I do is I'm an adjunct instructor of entrepreneurship. So this is something that at the college level, I probably spent a few classes going over. But
so that was a little loaded question there.
Yeah. But a venture capital firm essentially provides capital, so sees the potential in both the entrepreneur and idea. So it's typically a venture capital firm is making an investment in a company, but a company, as you know, is largely its people and its technology, and is doing that in a way where it's providing capital, typically in exchange for equity, although there are different ways to structure an investment, but essentially seeing the promise of an entrepreneur in a new company, providing capital to help grow that company and essentially build out what they've built to date. And a lot of times that comes along with strategic support. Sometimes that's through informal mentorship. Sometimes it's more formal through a structured board seat. And we could talk forever about different ways to structure those investments, but really venture capitalists provide money in exchange for a piece of the pie, investing in an entrepreneur going forward.
Perfect, thank you. And I did want to also, because I just thought of this before I really get into the questions here, giving Monica Rojas from our team a shout out, because she's actually the one that leads a lot of our startup efforts with Sarah and Imran, who are chair and vice chair of that committee. And so she's actually the one that put all of this together. So thank you, Monica, for that, because I can't take credit for this morning at all. So thank you. So our first question here for Mark. Mark, can you give us an overview of South Florida's startup and investment scene from your perspective? And where are we now versus how has the ecosystem improved over the years?
Sure, that's a great question. And we're seeing obviously a lot of change, particularly over the last year. But I think it's really a long-term sort of evolution to have a tech ecosystem. And so I think as Miami has grown and South Florida has grown in population, more and more people obviously have moved here over the last, call it 50 years. And some of those obviously are entrepreneurs who want to start their own business. So that's really step one, is to have the right people here. And so it's entrepreneurs, and ultimately entrepreneurs need resources to help them. And so that really, you look at mentors, advisors, early, investors like angel investors, then they need, professional investors. And so the ecosystem is really accumulation of all these different resources. And we've obviously come a very long way in the last 10 years, where it was really unstructured. There was lots of people starting businesses, but it wasn't in a way that there was sort of support system or people were linked to each other. And that's really happened, I think, over the last sort of 10 years, where a lot of that's starting to develop. And we're still, nowhere close to maybe where New York is today or Silicon Valley, but every ecosystem is its own, ecosystem, building its own way. And I think we are finding our own way. And I think the last year through the pandemic has really showed how a lot of people have moved to Miami or moved to South Florida, and starting to join the ecosystem. And it will take a while for everybody to get to know each other, because the ecosystem is not just all the individual parts, but it's the connectivity and the density of people knowing each other, referring things to each other, working together. And that's starting to evolve. But that will still obviously take many years in the future. But I think we've made great strides. And I think, as we sort of create more support systems and more of these types of events to get people together, I think that's really, continues to build the ecosystem here in South Florida.
Great answer, Mark. And any of the panelists, if anybody would like to, after any of the questions, to follow up or have an added comment, please feel free to add anything there. We did get a really good question here as you were talking, Mark. Was Jeff asked, where do you see, let me see, he says, where do you see the greatest needs or areas for improvement to continue to build and solidify the local tech ecosystem? And I guess that'd be for anybody.
Yeah, I mean, I can just add to that. I mean, my big concern still in the ecosystem, the flip on one side, I feel like we've made a lot of progress and things are growing and there's a lot of activity. I still think sort of the general sort of quality of, some of the startups and what we're seeing sort of as a professional investor is still significantly lower than we would see in some other ecosystems like Atlanta or New York. And I think part of that comes down to sort of, the advisors, the mentors, the education to make sure founders know what they should be doing, how to position the companies the right way, how to approach the right investors at the right time. And none of that is obvious. It's all really something that someone wants to help the entrepreneurs. It's not something that's easy to figure out. And I think that's, again, evolving in South Florida with more and more of the accelerators and incubators and support system. But that still has a long way to go. But I think as we've got more experienced people moving to South Florida over the last, call it, few years, particularly over the last 18 months, I think that will really help sort of, make that move faster towards the right direction and improve the quality of those matches so that, the companies we see are more likely to be at the right stage and the right place to get funded.
Mark, I'd like to add to that. That's really interesting, and I totally agree, because we've, I say I'm here to launch SeedFunders Miami, but we've been doing it virtually for 6 months. We've been interviewing companies every 2 weeks. We've had Miami companies present to SeedFunders virtually, and I have a few partners, and I've noticed the same thing actually, even on the pre-revenue stage. These early pre-revenue companies, we're having difficulty finding companies that are fundable at that. And so we need to really encourage the entrepreneurs and get those incubators and accelerators to start turning out even these pre-revenue companies, these people with an idea, these people that want to get that first $150,000 and get them in the door and come to us, and we can fund those companies. And we are having a little trouble and I attributed that to being virtual so far. And so we are coming live now, and I hope to help solve that problem and get those companies that first 150,000, and then feed them up to you and to Sarah and to Jeff for further on funding in a year or two.
Dave, and I'd love, oh, go ahead, Jeff. Are you going to say something?
Yeah, well, I'm just going to jump in because I think it's an interesting question, and I actually think there's a lot to it. And I like what Dave was saying. I like what Mark was saying, and there's a part of it, Mark just mentioned feed it up to, and I think that's extremely important to understand, right? That it's the finance houses like all of us that really need to start coming together and locking arms and communicating. As I said earlier, really where our wheelhouse is more the later stage. It's really where we bring a tremendous amount of value to our portfolio companies and ultimately the founders. But it has to start somewhere, right? And with Dave's organization, we're not going to really be in that world, but we need someone like Dave to be in that world. And then, maybe Dave, introduces it to Mark, and Mark's, ticket size then, takes it from that mid life cycle, and then Mark hands it off to people like us, and we take it, to the finish line. And that's really, I think, what's important. And the other thing that I think is really important is we need to have more people like Dave and more people like Mark and other investors. I mean, I've been on a lot of interviews, in a number of different media channels as of late. As we all know, Miami's kind of the cool subject right now when it comes to tech. But I've said this a number of times to a lot of people. We can have the founders come here and we can create an incredible ecosystem, but we also have to start having Miami, South Florida investors participate. That's one of the things that I think is really interesting with everything going on right now. I honestly, and this is crazy, but I haven't had one single firm, one single investor lean in to say, hey, you've been here since 2017. You've deployed over $50 million into South Florida over the last 4 years. Let's talk about some of the companies that are in your portfolio that you think we might be interested in investing in. That conversation hasn't taken place one time. And I think that that is in desperate need. We need to start having people investing in these companies. The capital has to be here, or these companies are going to go elsewhere where they can find it.
And I'd like to jump in and mention a couple of things. One, you think about South Florida and the legacy of innovation that we have here, from the founding of the personal computer in Boca Raton, with the old IBM complex, to, we've had a number of entrepreneurs that I've talked to a number of really interesting entrepreneurs who have spun ideas out of places like Citrix or Motorola, engineers who've come out of there. So when we're really an ecosystem, part of that is looking at the large enterprises and what corporate is doing to support the local ecosystem, both, as beta customers, and then also, we've got one of the largest energy companies, here in South Florida, whether we want to refer to it as FPL or NextEra, but they've started a new accelerator program, and a number of other corporate ventures, Carrier, Ryder, have really entered the ecosystem to support specific verticals. What happens there is you really fuel a cycle of activity, and ecosystems need that cycle of activity. So you need the individuals who innovate. You need obviously the capital, but then the people who go on to become successful need to get back into that ecosystem. So whether it's from the corporate level or as investors, one of the things that we need to do is really shine the spotlight on those folks who've, I think Mark here is such a perfect example. While your company wasn't necessarily Florida homegrown, it's an entrepreneur who found success and now has, not just created a successful firm, but also become a key player for support throughout South Florida and, the whole Florida ecosystem. So it's people, it's capital, but I like to think about that cycle of innovation, and we need to get that wheel spinning.
That's a good point, Sarah. I could point out something in Tampa. There was a company called ConnectWise, started locally in Tampa, grew over the number of years, sold for over $1 billion, $1.1 billion. It instantly created 70 millionaires. 70 people had enough equity in ConnectWise to become instant millionaires. Those 70 people are now becoming investors. They're starting other companies, sub-companies. So that's an excellent point. That's creating a economy.
And I did want to ask, because Sarah, I know I wanted to pose this question to you, but I feel like you kind of already started answering it here, was, with what Jeff brought up, where a lot of times, we do have, we're one of the top places in the country, and I know even on many lists in the world for startup, and entrepreneur activity. But then we talk about funding and growth, then we kind of go down on that list. So why South Florida? Like, why would a startup want to start here? Like, what do we have that maybe differentiates us from other areas across the country?
Well, I mentioned the legacy of innovation that we have here. I think, we've all talked about the need to focus on talent, and Tech Hub has a number of efforts to focus on both the attraction and promotion and development of local talent. But we do have a fairly strong untapped talent pool here already. We can't have this conversation without mentioning, the favorable policies that we have at the state level to build and grow companies in Florida. And I think there's certainly more that can be done to support local innovation at the state and local level from a policy perspective. But this is one of the areas where people go to because of that favorable tax policy. I would say that we can and are trying to, through events like this and others, really shine the spotlight on our success stories. I think people need to be able to see whether you're an investor or an entrepreneur or perhaps a later stage, a PE or someone who's looking to, I don't know, if you have a SPAC, in this day and age, you need to be able to see the stories of success here, and we've got them. And I think aggregating and telling those stories is something that we don't do enough of, both from the investor and the entrepreneur side of things.
Yeah, I think Monica was just writing that in chat here. It's just kind of knowing who's who and what's in our backyard, I think is a big piece of it, because I think a lot of it's just, it's out of sight, out of mind. If you don't know, you don't know, right?
Yeah.
So thank you, Sarah, for that as well. And I do want to get into a few questions here. We've got 3 or 4 of them that are for the actual startup companies that may be listening in right now. I did want to ask David, how do you evaluate a possible portfolio company and their business plan? What are some of the important pieces that you look for?
Sure. We and let me say, I've seen a number of requests here for personal meetings and things like that. I put our website up there, SeedFunders.com, and my personal email is dave@chitester.com, dave@chitester. So email me directly, anyone that wants to talk about anything about your idea, your company, or whatever. But what we look for really is basically, like I said, pre-revenue scalable technology with a clean cap table. But what we're particularly looking for is somebody that's already developed an MVP. We're post friends and family. So somebody's already has an MVP that has somehow come up with an idea and come up with something pre-revenue yet. But really, we look for the 4 things in an entrepreneur. Really, we look for the drive, somebody that really wants to be passionate about what they're doing, somebody that has taken an idea and taken the initiative to implement that idea, somebody has the integrity to pull it off, somebody has the perseverance to keep going. So those are the 4 things we look for in an entrepreneur, because you always hear the story about the horse or the jockey. Do you bet on the jockey or the horse? And I always say that everybody says you really got to bet on the jockey, the person that's really starting the company. But on the other hand, you remember Secretariat won the Triple Crown, but who remembers who was the jockey on Secretariat? So it's both. It's both the company and the entrepreneur. So some entities say we just really bet on the entrepreneur. Others say we bet on the horse. We want to see the company. We look at both. We really look in depth at both. We have a 120-line due diligence questionnaire that we analyze. Our due diligence is actually fairly easy because there's no existing customers, no revenue. But those are the kind of things we look at. So, and we do look at all industries, basically all technology, as long as it's a tech-enabled type of a product or service. That's what we consider fundable with an MVP.
Perfect. Does anybody else want to add to that question?
Yeah, I was just going to add, I agree with everything Dave said. We clearly look for great founders, but I think the one thing that I would really tell founders is to research the people you're pitching. Every firm is different and looking for something different, particularly around stage or even industry. And so it's really important to research that. In our case, for example, we really look for early, product market fit and evidence of that. And I know there was a question in the chat around what that means. It sort of means something different for every company, but generally that means paying customers that are validating that they're willing to pay some amount of money for your product. That's how we look at it. But it's not always revenue. Most of the companies we invest in sort of are approaching that $1 million ARR level. But we have invested in pre-revenue companies that have other evidence of that product market fit. And that may be tens and thousands of free users using the software with a very clear and very concise plan on how you will monetize that in the very near future. So we're not the type of investor that might wait 3 years for you to generate revenue, but we may be willing to invest at minimal revenue if you can show other ways that you have that traction and that product market fit. So, for us, the key is really, like Dave said, the person, the entrepreneur, the company. We do want to invest in things we understand that make sense, to us. But then the one piece we add, because we're a little bit later stage than SeedFunders, is we want to see sort of evidence of traction, and that can be different for every company. For us, usually it means paying customers. That's the easiest for us to analyze.
Mark, you said something actually really smart there that I caught. I don't know if anybody else caught this, but I've only sat on a panel a couple of times, either as like a mentor or a pitch competition judge. And the one thing that you said that stuck out to me is making it make sense, because there was a few people that I could tell were super smart. Half of the stuff probably went over my head just because I wasn't as smart as them, but that I'm sure that a lot of times there are these people that, you know, to them, their product makes complete sense, and making sure that you can kind of create that visual and making it make sense to the investor, because if the investor doesn't get it, then you're not getting the funding. So I think that was a really key point too, because I know I've seen a few different pitches that at least went over my head. I'm sure all of you on this panel are much smarter than me, but.
Yeah, one of the worst questions, or I guess a very telling question after you finished your pitch to an investor, if one of their primary questions is, so what's your revenue model? Then you should probably go back and revise your pitch a little bit, because any investor after hearing your pitch should be able to you know, have at least a general sense. And you know, that's the time for diving in more deeply. But you know, there's some basic things that you need to make sure you spell out on the front end. And I often see this from you know, PhD scientists or medical doctors, people who really know the ins and out of their technology in their field and their specialties, but aren't necessarily the best folks to translate that into an investable opportunity. That said, there's a ton of resources available for founders, no matter what the industry. Organizations like the Venture Mentoring Team, which provide free, you know, mentoring and support and pitch scrub services to ventures. We've mentioned accelerator programs that will work with you to you know, to not just refine your pitch, but also really narrow down you know, your initial opportunities, et cetera.
That's a good
That's a
point. And
separate
actually,
panel.
Lawrence dropped Toastmasters too in chats. That's a good one too. Just be able to speak. So kind of along the lines actually of what we started talking about here is, Jeff, what are some of the most common mistakes by entrepreneurs in pitches or in the early stage of business that you've seen? And what are some of the most common like red flags?
I think, first of all, you know, I think Mark said it earlier, you know, do your research. I think that's really important, right? You have to understand who it is that you're speaking to, who is your audience. You know, if you're speaking to Dave or to Sarah or to Mark, it's probably going to be a little bit different story than talking to us, just because we're investing in different life cycles of the company's growth. I think some of the things that I always would say is there's an old saying, seek to understand before being understood. So a part of doing your research is really going into a call, understanding who you're talking to, but then asking that group before you even get started, you know, what is it that you would like, you know, me to do while we are on this Zoom, you know, together, or we are in this meeting together. If you ask those questions, you know, you're going to get all the answers in advance, and it's kind of hard to then screw it up unless you don't have, you know, the subject matter that they're looking for. And that really should never be the case. You should always have subject matter, no matter what question. You should be proactively thinking about what could be coming at you. Another thing that I'll share with everyone that I think is really a missed opportunity that a lot of founders, for whatever reason, just don't pick up on. You know, every venture capital firm is different, just like every founder is different, and every company that they create is different. We all have our different and our own artistic styles. You know, our firm is very focused on transparency. And again, we're here in Miami, and we're trying to do our part in creating this ecosystem. And so we spend a lot of time, energy, and mental capacity, and quite frankly, money, on making sure that anyone in the community that wants to follow us can follow us, right? Be it on LinkedIn, be it on Instagram, you can follow, you know, the firm, and you can follow the individual investors from the firm. But we're constantly highlighting portfolio companies. We're constantly highlighting founders. And if you start to think about that connection a little bit, right? So if you see someone like an Olas, right? Olas is probably one of the most legendary, well-known entrepreneurs in the world. He was one of the founders of Beats that was ultimately sold to Apple for $3 billion. He then went back to Sweden and he started Spotify for Business, a part of the Spotify family, and is now the founder and CEO of Soundtrack Your Brand. Massive, massive company in 74 different countries. And you could literally get his Instagram handle and send him a direct message and say, listen, I'm in Miami. I'm about ready to pitch Jeff Ransdell at Fuel Venture Capital. I realize you've been with them now for 10 years. Can you tell me a little bit about how I should be prepared and what I should be thinking about in doing this? There's no better person to tell you those answers than people who are already in the stable working with us. I just think that when you go back to what Mark said about research, I just think it's a absolute miss. And again, not every firm is going to be that transparent, so you don't have that opportunity with everybody. But with firms like ours and other firms that maybe are following suit, I think it's something that people really want to do. Seek to understand, do your homework, and try to find other founders who have been in front of that group to give you the do's and the don'ts.
Perfect. Thank you so much, Jeff. And all of you. I mean, you guys have had some great answers to these questions. So I'm hoping this is really valuable for everybody as well. And I did want to kind of switch the discussion here a little bit, but Mark, so can you explain to us what is a deal flow, and are startups able to take advantage of the cyclical patterns to improve their chances of getting an investment?
Yeah, so I think that's a really interesting question. And the more entrepreneurs can understand how venture firms operate and how specific venture firm operates, the better. So there are some cycles, and again, every firm is going to be different, but it's important to understand where a firm is in like their fund life cycle, for example. That's the first thing to understand. Like we just started investing out of our new fund, so we have maybe more time, maybe we have more capital to deploy. We're obviously looking to make 20 investments in our new fund, and so we've only made 2 so far, so we have room for 18 more. That's different than if we were sort of at the end of the fund and we're looking for our last investment. I think it's also important to understand what firms are looking for. So for us, for example, the first few investments are really important because those are almost like showcase ones that your investors will pay extra attention to. The ones in the middle might be sort of the ones where you can, maybe go a little bit outside your box and experiment a little bit. And then towards the end, you probably also want to be very specific what like your last investment is in a specific fund. So that's one thing to think about. The other thing is sort of in terms of life cycle within the year. And this is much more difficult to figure out for entrepreneurs. But clearly when we're really busy or we're in the middle of closing 1 or 2 other investments, we're probably less likely to engage in new discussions. And so our bar becomes higher. We'll still take pitches, and if a company is great, we'll certainly pursue that. But the bar to sort of get our attention is higher if we're really busy and with other things. And how to figure that out is really difficult. But maybe that's a question entrepreneurs can ask on an intro phone call. Say, is now good timing? What's the right timing? How do we fit into sort of your life cycle? What's the process? I think it's really important for entrepreneurs to ask all those questions and also make sure they hear the right answer. Sometimes entrepreneurs hear the answer they want to hear. And that's not often the right answer. So if you hear like, we're really busy right now, but May might be a better time, or June, then that's an important sort of cue to take. Well, maybe I should reach back out in June with an update and it'll be a better timing then. But for, all venture firms clearly manage what we call deal flow. Is essentially, we have a target of looking at, call it 12 or 1,500 proposals or pitch decks a year. And that's obviously somewhat cyclical when it comes in during the year, when we're busier, less busy, how that relates to, again, where we are in the fund life cycle. And every venture firm operates differently, different ways that partners, sort those deals or share those deals, how they look at them, how you get into a venture firm to a specific partner. Some of that matters at some firms more than others. And again, that's where I think it's really important to do the research. And as Jeff was saying, try to get some inside, baseball inside the firm so you really can optimize your chances of sort of getting the attention and getting that audience with the firm.
Nikki, if I could add to Mark's comments there, I totally agree. And, when I got my first venture capital deal, this is when I was on the entrepreneur side of the table, and I got my first venture capital deal. It was 2 years from the time I met the venture capital firm in Tampa. It took 2 years before we got a Series A because we weren't quite ready. They had their eye on us, and we continued to develop. And it literally was 2 years when we got a Schedule A. So it definitely depends on the timing, not only of the venture capital company, but the timing of the firm and when you fit in. And as far as SeedFunders, we use a software called Proceeder. So in answer to your question on deal flow, basically everybody that we look at has put their information into Proceeder. It gives us a standard way to look at things. So anybody that's on the line here that's asking me questions about applying, our website is seedfunders.com, and there's a thing that says submit. And it goes to Proceeder, and we ask some standard questions, and we compile all that and move those along. Now, as far as the cycle that Mark was talking about, if a company is too early or we put them into a hold pattern and we say, okay, we like what you're doing, but we need more time, we'll keep in touch. We put them into a hold pattern on Proceeder. Other ones we move through to the due diligence. So every firm has a process like that. And our process is relatively simple and transparent, as Jeff says. Here we are, and ask us questions, and we'll answer them.
Perfect, thank you. And just letting everybody know, I'm keeping time here, so I want to get a couple more questions in, and then we actually have a ton of questions from the audience. So I've been keeping them all on a sheet here, and hopefully I can get to at least as much as possible. But Dave, so this next question for you is, so many of your investments are pre-seed, meaning that they are pre-revenue companies, right? So how do you determine risk, and how important is user traction for these and any other investments?
Yeah, when I started SeedFunders, like I said, in St. Petersburg, I thought we were seed. We say, okay, we're SeedFunders, we're seed level. I found out about a year or two later, we're actually pre-seed. I didn't even know that category existed. Now people say, oh, we're pre-seed. We're invested before even the seed investors invest. So we are. So I could change the name to, I guess, pre-seedfunders.com. I don't know, but we are seed level, pre-seed level. Well, what do we look for really? Well, because there is no revenue, it's really a little difficult to determine that. But valuation is very critical. Valuation. So how do you determine a valuation if there's no revenue? Well, basically, and if you do the research, you'll see there's about 10 methods, 10 or 12 methods. And I did a podcast on this recently, and out of all those, but what the entrepreneurs have to realize is that at our level, in our investment level, we need to be sure, you're never sure, but we need to see that we can get a 10x return in 3 to 5 years. A 10x return, because 42% of the companies are going to fail. We'll get zero, not even going to get our capital back on 42% of the time. So we need to see a potential 10x on every single deal. Well, if a company has a 10x, and they need to be a $30 million company in 3 to 5 years to be worth $3 million today. There's a 10x. So there's a way to, it's called the venture capital method. So there's a way to calculate that, even though there's no revenue. Can we be convinced that that company is a $30 million company in 3 years, based on the assumptions, based on the market, based on whatever we analyze in due diligence? We're assured we feel comfortable that's going to be a 10x return. It needs to be a $30 million company to be worth $3 million today. That doesn't count dilution. So if there's going to be 50% dilution on that, the company's worth $1.5 million today. If it's going to be a $30 million company in 3 years, and we're going to be diluted 50%. So there is a way to calculate it based on assumptions, based on the industry and things like that. So we look at the numbers, and valuation is very critical. The other thing is we're early on, we don't like safes, or we don't like convertible. No, we like equity. We want to be an equity investor. And that's a way to calculate what is the company worth today, even though there is no revenue. So those are the kind of things that we look for.
I'm hearing a lot of from all of the panelists. There's a lot of research, learning, listening, a lot of things that kind of go into, instead of just like, hey, I need money, who can I talk to? There's a lot of research and a lot of listening that goes into it. So I'm learning a lot myself here. For you, Sarah, where can startups find potential VC investors?
It's a great question, and one that doesn't have just one easy answer. If you scroll up in the chat, Monica did drop a link that I would recommend. Part of our efforts in the startup committee, we've aggregated a number of resources for founders. And one of those is it's a Google Doc spreadsheet, or I guess that's right. It's a Google spreadsheet or a Google sheet that has aggregated a number of the opportunities for funding, and then also for co-working space, for incubator accelerator programs, et cetera. So I would take a look at that sheet as a starting point. And a lot of the activities that Tech Hub sponsors, there are a number of activities that are specifically targeted to founders. And I think one of the best ways to learn how to negotiate this ecosystem is to talk to people who've already done it and been successful. I don't want to underplay how hard it can be. Mark mentioned how many companies they look at. We look at probably, I don't know, maybe 400 or so ventures a year, and we may invest in 3 or so of the new ones, in addition to follow-on investments in our current portfolio. So it's a lot of legwork, and I think that as we have additional investors entering the ecosystem, I think our shared hope is that there will be additional sources of capital for founders. Also wanted to mention that for interested investors, I do think we've talked a lot externally about how many untapped resources we have here in South Florida, how much capital we have here in Florida that, at least a portion of which could be better leveraged to help grow and support the ecosystem. So if there's anyone who's interested in learning more about how to get involved on the investing side of things, oftentimes that'll happen as an angel investor. You might want to become a member of SeedFunders or New World Angels. You might want to become a partner in a fund, however that's structured, whether it's Olas or something else. There's lots of ways to get involved, but how exactly you go about that isn't always clear. I think that especially for those who are moving to South Florida, part of the responsibility of moving to a new area and establishing yourself is engaging in the community, and your investment thesis and expanding your investment portfolio to the companies that are in your backyard can be a part of that.
And I would just add one thing, Sarah, everything you said is great. But I think rather than startups trying to figure it out themselves, if you're an entrepreneur and have never raised money before, I would recommend the first thing you do is add somebody to your team, either as an advisor, a mentor, a CFO, add somebody to your team who's done it before and can help you walk through it. Because the worst thing is if you're pitching VCs where you're not at the right stage, you come across as, totally, clueless, and that's really not good. And so the key is find somebody to help you. Find earlier stage investors. It's easier to find an angel investor than it is to get a venture firm to invest. And once you have angel investors, then those investors can help introduce you to the relevant venture firms. And so fundraising is somewhat of a numbers game, but at the same time, it's a quality. So like when we help our firms, our portfolio companies raise the Series A or Series B, we don't make 100 intros. That's usually a waste of everyone's time. We really try to narrow it down to 5 or 10 firms, and all you need is maybe 2 or 3 interested to get the deal, to get the investment done. If you've really sorted down and get warm intros, find the right folks. So that's why, as an entrepreneur, finding that key angel investor who can put in some early money and then help you navigate the ecosystem and make those warm introductions is really critical. Because if you've never done it before and you're just randomly emailing people, your chance of success is a lot lower than if you get somebody to help you.
If I could just add one thing to that, to both what Mark and Sarah says regarding the investors, and again, some statistics. I'm an engineer, so I throw out a lot of numbers, but forgive me, but only 3% of accredited investors invest in these types of deals. 3%. It's a job of all of us here and everywhere to get that to 5, 6, 10%. 3%, there's a lot of money out there that people just don't realize they can invest in these kinds of deals. So again, it's the job of all of us is to get those accredited investors out there and get them involved in what we're doing.
Yeah,
Thank you, Dave. And oh, Jeff, go ahead. You're going to add something there?
I just want to add one thing to this question, and I agree with everything that Mark and Sarah had mentioned, but I'm gonna bridge back to what I was talking about a little earlier. And especially if you're coming into Miami, who are the investors? And again, I think it really makes a lot of sense to try to reach out to I'm a former college athlete, and my father used to always tell me you got to figure out who is the one person on the team that you admire the most and want to be like, and then you mirror that person and you develop a relationship with that person, and you try to I was a hockey player, so you try to skate with that person on a daily basis. There are some really successful founders in Miami that really have their head down. That's the one thing that makes Miami different. I mean, and you're going to find that when you're doing your research. I mean, these more older stage companies, these founders are working 80, 90, 120 hours a week. So you're probably not going to find them on these chat, these WhatsApp chats or these different groups that are put together, because they just don't have the time. So, my advice is to try and figure out who those individuals are. A person like Ricky Lavinia, who is the founder and CEO of Tickmark, which is TaxFile right here in Miami. I mean, they're just completing their Series B, and they have a valuation of a pre-valuation of $110 million right now, and have major corporate investors and everything else. Get a meeting with him and ask him, how did you get where you are? You started in Miami in 2016 when nothing was here, and here you are, years later, doing very, very well and scaling, and you have a beautiful cap table. If you were me, what would you do? I and Aaron in Fort Lauderdale, with Ubiqua, one of the most exciting companies I've seen in a really long time, right here in our backyard, just received a third-party valuation at $1.5 billion from JP Morgan. I mean, that's right here in our backyard. And this is a guy that's taken 16 different companies public. This is a guy you want to get in front of. And this is a guy that can help you, figure out who are the players at the time of your company right now. Here's who you should be talking to. But these are some of the best players on the ice, and you really want to try and figure out how you get to them. And, it's the 6 degrees of separation. Who do you know? And again, you can literally just follow our firm, and you can figure out who these people are, and you can direct message them. It really doesn't get any easier than that.
Thank you, Jeff. I know we've got just about 5 or 6 minutes here, so I want to get in at least a couple questions from the audience. So it looks like one of the common questions, both in the chat and in the private chat that I'm getting, is what is the panel's position on informing entrepreneurs the reason that they are passing on an investment? Is that common for them to tell them directly why?
I guess I can give a quick answer to that. I think it depends. For us, we try to be as direct and as constructive as possible. At the same time, if we've just gotten a quick email and passed kind of very quickly because it's not a fit, we generally just say it's too early or not a fit. And that's really the honest answer. We haven't spent more than a few minutes, but if there's something disqualifying in the first 2 lines of the email, like your pre-revenue, and for us, that's not going to work, we're really not going to study the whole deck to give you feedback on your business when it's just not a good fit for us right away. So I think, the expectation should be commensurate with how much work we've done. So if we've taken a meeting or 2 meetings, we're much more likely to give you substantive feedback than if you sent a cold email in and we sort of look at it and it's just too early for us. And that's what we'll tell you. It's too early, and sort of look at the next one. I mean, we're getting multiple decks in every day. And so I think that's key for entrepreneurs. But if you do want more feedback, or you feel like you haven't gotten enough, I think it's perfectly okay to send an email back saying, can you give me a little bit more feedback on, what I can do to sort of, improve or be more relevant. I think that's perfectly fine. But that's kind of how we think about it.
Yeah, I'm gonna try to be a differentiating thought process here. One of the things that I think a lot of founders, maybe it's just because of where they are in their own age group and how they were brought up. But nowadays everybody wants to communicate through emails and trying to get appointments and reach people through emails and whatnot. And I think you got to try to figure out how to be a little bit more differentiating, right? You got to figure out how, like I said before, the 6 degrees of separation. Who do I know that might be able to make a personal introduction? I mean, I'm looking at my phone right now. I have 3,403 unread emails, and what is it? Today's Tuesday. So I mean, it's bananas. I mean, it's almost impossible to keep up with. And I've got 316 unread text messages. So it's really, really hard. And to your point, you might, one of the things that stresses me out the most is I don't want people to think that we're being mean or we're being arrogant or anything else. It's just a function of time, energy, and mental capacity. You only have so much of it. We look at a lot of things, and a lot of things come in. We don't always get to it just because it gets lost in emails. I picked up something new here today from Dave with this Proceeder. I wrote it down. I'm going to check it out. Maybe that'll help us a little bit with some of this incoming traffic. But we do try to reach out to everybody and let them know and have a talk with them. But it doesn't always happen, and that's not because we're trying to be jerks or anything else. It's just we're fallible human beings like everybody else and only have so much time like everybody else does.
Thank you, Jeff. And we've got time for probably one more question in here. I did see again in the chat and also private chat the question of when you guys were talking about mentorship or adding somebody to your board. How do people do that? The question is coming up. Okay, that's a great idea, but how do I do that? Where do I find these people?
So I'll jump in there. I think, there's structured mentorship through programs, like I mentioned, the venture mentoring team, or many accelerator or incubator programs have mentor networks that are already in place. I volunteer as a mentor, for example, through the Babson Win Lab, which is an accelerator program for female entrepreneurs. That said, I think that a lot of times when you're looking for investment, you're not just looking for capital, but you're looking for mentorship and advice, and oftentimes looking for people who might be ideal investors for your company. Even if they're not willing to invest, sometimes you'll find a fit with someone who's got the subject matter expertise and the, whatever the industry is or the track record. Mark mentioned making sure that you bring someone on as an advisor who's raised capital if what you're looking to do is raise capital. And oftentimes people might not be willing to write you a check, but might be willing to give you a few hours of their time on a regular basis in an advisory capacity. So it's there's not a one size fits all answer. I think many of us struggle in the who we look to for mentorship is a really important question. And I would also caution that not everything that a mentor tells you is something you should do as a founder. Just because a mentor or a potential investor says something doesn't mean you should go do it. So don't lose your common sense in those conversations. Make sure you keep your feet on the ground, and remember, your business better than anyone else.
A very good point, Sarah. I think getting second opinions, just like you would going to the doctor, but also being crazy enough to believe in yourself is really important too. So, and that we are actually right at time. So that was a perfect way to end that, Sarah. Thank you so much. Thank you again, Sarah, Mark, Jeff, and Dave, of course, Beth as well. Really appreciate you guys this morning. Seeing a lot of questions, comments, activity in the chat. So that's always a good sign. So it looks like it was a great panel discussion this morning. And again, thank you for everybody that showed up this morning. If anybody does have questions, because I'm seeing a lot of that again in the chat, please email myself or Monica. It's literally just Monica at techhubsouthflorida.org or Nikki, Nikki, at techhubsouthflorida.org, and we'd be more than happy to speak with you, connect you with any of these folks, or give you, any help where we can help out. But that's all I got this morning. So thank you again, everybody, and have a great day.
Thank you, everyone.
Thank you. Bye.
Bye,
Thank you.
everyone. Thanks for having us.
Thank you.